Welcome back. You're still tuned into Inside Out on CNBC-TV18 and on Swotlight today, we have S H Kelkar, which is a large domestic player in the flavour and fragrance market with the last known market share of 10 to 12%, that is in the flavour market, and close to 20% in the fragrance market. So basically, the products that the company makes is used as a raw material in many industries. Flavors are used in baked goods, dairy products, beverages and pharma products as well. And fragrances are used in personal wash, there's fabric care, household products, skin and hair care as well. The company, for its own manufacturing, uses 1,500 products as raw materials. The broader categories of these raw materials, out of which 50% are imported. In terms of financials now, they have been continuously growing in terms of revenues from around 1,050 crore rupees in FY19 all the way to around 1,600 crore rupees in FY22. However, margins have been coming down and are very volatile. After a sharp increase from FY19 levels from 13% to almost 18%, they are now back to those levels because of sharp hike in raw material prices. Profits as well have been impacted and are very volatile, as you can see on your screen. So financials are not very inspiring. The company gets 90% revenues from flavors and just 10% coming in from fragrance. In terms of geography, most revenues come in from India, around 21% each from Europe and rest of the world markets. This company is known for inorganic growth. They have made a lot of acquisitions in the past and will continue to do so as per the management. In FY22, they acquired Holland Aromatics BV and New Taste Food and Drink Private Limited to expand into newer markets. With New Taste Foods, they want to focus on QSR space as, according to the company, 2,000 crore worth of flavor and savory products going into QSR. And they are looking at a 200 crore worth of potential market from this. And from current levels of 12 crores currently, they plan to grow at a faster pace. Company usually takes annual price hikes, but due to COVID and volatility, they took price hikes twice last year. But they expect the normalized process to come back in place for price hikes. So one of their big trigger is a big request for proposal from a large global MNC where the size of the proposal is $1 billion, out of which they say the potential is $100 million for the next 3 years, and they are targeting 20% share in the first RFP itself. But with triggers comes some risk as well. The company has sizable exposure to imports and Europe as well. So foreign currency volatility will definitely impact their financials. Yes, the Europe weakness could be near term, but it will impact their revenues. Also, debt of the company stands at 503 crore rupees in Q2, which has increased quarter on quarter due to acquisitions. So quick integration of all these acquisitions is important so as to not over-leverage the company. Company also came up with Q2 update today where they spoke about inflationary pressures in Europe and impact of currency movement on profitability. They are taking price hikes to mitigate the impact of this pressure, especially witnessed in the European markets. Let's talk about shareholding now. Promoters hold 58.46% stake with some big names like IDFC FlexiCap, Tata Mutual Fund, there's Malabar India Fund, there's Harding International, India Inside being some big names. Blackstone recently exited S H Kelkar by selling its entire stake in the company at a massive premium to Farmank via a block deal. And in terms of valuations, stock trades at 16 times one-year forward earnings, but growth is something that the investors will be watching out for. And with that, we have run out of time on this episode of Inside Out. It's a goodbye from Nigel and I. But do write to us and tell us the companies you want us to discuss and you want to hear about. And we'll feature these on our show. Thanks a lot for watching.